morning traders, happy new year to you all. May it be a great year. It's Richard here doing a quick Ichimoku cloud chart market review of the Xetra Dax Index. We'll start with a weekly, really big picture. We had a fantastic fourth quarter rally here in 2023. The index did manage to break past this 16290 resistance zone, and then that's now a potentially new support zone, depending if the market is going to consolidate back down to this zone there. But the rally ran into a little bit of resistance here created resistance. After becoming a little bit extended from the top end of the cloud. We look at the distance between the price action and the cloud. Every time we get a rally strong away from that, we get the consolidation back down to close that gap a little bit. You can see here from this huge rally in fourth quarter of 2022, managed to break past the top end of the cloud, then had a strong rally throughout the year, then only to consolidate back down to the top end of the cloud after becoming extended. So similar situation here with the DAX. Becoming very extended, spinning top there gave us confidence that the market's in the process of pulling back, and support levels is this 16,478, and the next one to look out for are these highs there at 16,300 basically as the next downside risk target on the weekly. But there's downside consolidation risk in this quarter all the way back down to the top end of the cloud here. At this, let's put a line in there quickly. 15,751, and as well as the standard line there, also very close to the top end of the cloud. But so far, price action is still above the cloud. That's bullish, with downside consolidation risk back down to this old cloud chart support levels, now the old highs there, and if these levels fail, then we can go back to this standard line level there, 16,000, and then 15,751. So these are the downside risk targets on the weekly Ichimoku. Turning to the daily here, after becoming quite extended from the top end of the cloud here, we can see we're now consolidating, getting close to the standard line of the cloud there. That's a key support zone to watch out for, 16,459, for a potential swing trade rebound if support holds at that level on the daily. If support fails, we can dip back down to this support zone of 16,300, and then downside risk to 16,000. So these are the downside risk targets if support fails to come in at the standard line of the Ichimoku cloud. We've also had a MACD sell signal up here, and if we look at the 4-hour Ichimoku, we'll see where the intraday sell signal came through over here around about this 18th 19th of December. We've had a sell signal there on a Ichimoku cloud chart basis. But it was a great trade, swing trade, of when this index crossed the cloud to the upside here. Quite a few thousand futures point on the index in this one. Fortunately, the index did not cross the standard line until about here in mid-December, when it hit the trailing stop on that particular trade. But very strong performance in November and December in the Xetra Dax Index on the 4-hour Ichimoku. Front end of the cloud indicating that we might see further downside consolidation if we lose support at the 16,500 zone. We then will look at this 16.4 as a next support zone, 16,000 as the next downside risk target, and then this level here at 15.8 and 15.758.51. That's the downside risk targets if the index slices below the bottom end of the cloud here. It will then enter bear market territory or bearish outlook, because price action below the cloud is bearish on the 4-hour Ichimoku. So far still fighting for support at this bottom end support zone. If support holds, we'll most likely rally back up to the top end of the cloud, and if that resistance holds, and then it might sell off to cross the cloud to the downside. But so that's the kind of risk factor on this particular chart. I like the 3-hour one as well from Ichimoku cloud chart perspective. You can see very similar situation there, fighting for support at the bottom end of the cloud. Front end of the cloud indicating we might get further downside if support fails here. And then we have all these downside risk targets on the 3-hour to keep an eye on. On the hourly index, price action is below the cloud. We're bearish now. and watch out for the downside support targets on the hourly Ichimoku cloud as well. But back to the daily, downside consolidation risk, looking out for a potential support test of the standard line there at the cloud at 16,459, just below 16,500. But there is Q1 January and February consolidation risk back down to the top end of the cloud for a support test. That comes after a very strong rally from this low to that high. And if we look at a Fibonacci retracement of that move, we see that 23.6 Fibonacci retracement would be roughly in and around where the standard line is. And then a 38% retracement coincides very closely with this 16,000 support zone, significant support zone on the cloud. And then the 50% retracement is the bottom end of the front end of the cloud. So those are the downside risk targets if this consolidation lasts a little bit more than, but stronger, or a bit more than the usual uptrend, which is normally a 23% consolidation. So there's downside risk to these 23 and 38 and 50% Fibonacci retracement. They coincide very well with critical cloud chart support zones. But in the short term, we're looking for a potential rebound or a potential test of this 23.6 Fibonacci level, as well as the standard line of the Ichimoku cloud there. Until next time, happy cloud chart trading. Bye for now.